Hello, everyone. Welcome to week 33, 2025. These are our picks of the week. We're going to focus on three things. We're going to focus on the VIX, the FTSE, and the gold market. Okay, let's start off with the VIX. The CBOE Volatility Index is Wall Street's fear gauge. Now, it's a complex calculation. They use S&P 500 deferred months options premiums pricing to actually develop the formula for the VIX. Here's what you need to know. When the VIX is high, that means there's a lot of angst in the market, and that means a sell-off is either happening or may happen in the near future. Now, when the VIX is low, that means that times are good. There's not much angst. Everybody's comfortable, and those equities prices, those S&P 500 equities prices typically are rising. Okay, let's go ahead and take a look at your MT5 platform. Now, if you're not familiar with the VIX, there's a great CFD offered by Switch Markets that you can trade. Go over there to your Market Watch screen and just type in VIX, and you can see right there you've got the VIX, the VIX BOE Volatility Index, and you can see we've already got a weekly chart set up for you. Now, as far as this year goes, 2025 goes, you can see the big spike occurred back in early April when we had all the trade war panic and the tariff panic. Since then, things have really settled down in the markets, and you've seen an upwards trajectory in all three indices. Now, from a bigger picture and a longer perspective, and here's why the VIX really is important for a week like we're dealing with this week. We've got long-term averages that are absolutely key, and we've also got a long-term bottom in the VIX that may, in fact, come into play. Now, remember, our market drivers for this week are very simple. US CPI, the Consumer Price Index, that's going to tell us if inflation is hot or cold. All right, that's the first one. And the second one is going to be the Russia-Ukraine-US negotiations in Alaska over a potential peace deal in the Russia-Ukraine war. These are huge market drivers. They will impact the VIX. So here's the scenarios. If you do see the CPI come in hot, that's going to suggest that inflation's high and interest rate cut probably is going to be out for September. What do you think that's going to do to the VIX? Potentially might elevate risk just a little bit more with regards to U.S. equities. Now, if CPI comes in low and it's a fairly good number for the markets, that's going to suggest that those rate cuts are going to be on in September, and that's potentially a bullish market driver for stocks, which may in fact bring the VIX down just a little bit. So interesting stuff. Remember, hot VIX probably is going to send, a hot CPI is going to send the VIX up, whereas a good CPI, solid CPI, probably going to send the VIX down. Now, Russia-Ukraine, a little bit more complex because we don't really know what the terms of an agreement will be, but any sort of peace deal is going to send the VIX down, and any escalation in that war is going to send the VIX up. That's really all we need to know. Now, the key numbers in the VIX that you need to be aware of are the long-term averages. Now, I went to ChatGPT. I took a look at some AI intelligence. They said that the long-term average in the VIX is everywhere from 1858 to 1648. Sort of the rule of thumb for the last 25 years is probably going to be right around 21. That's what I was taught, and I pretty much stick to that. So my long-term average for the VIX is 21. Now our key number to the downside is 10. Big round number suggests multi-year lows. They're going back to 2000. You can see when 10 comes into play, typically you're in a pretty good shape. You're also sort of the calm before the storm. Watch the VIX. 10 and 21 are key. If you're above 21, you're elevated risk and be looking for bearish action in your U.S. equities markets. If you're beneath 21, life's probably pretty good and you're going to see some bids hitting the market. All right, second market we want to look at is the FTSE100. Now, this is relatively straightforward analysis for me. We put this on a monthly chart. You can see we've got two sets of Fibonacci retracement levels. We're on a weekly chart right now. These are the monthly levels. These are the monthly retracement levels. Suggest that we're very bullish. Price is above our 13-month EMA. That is also bullish. And then our weekly chart, our 38%, is right down there about around 9,001 or so. For me, we put a trade idea out last Friday after really going into the afternoon hours there. And that was a situation where we wanted to buy any sort of pullback. We do like the bullish side of the FTSE 100 and 9,000-ish, maybe 9,005. A pretty good entry. It's just a question of whether we get it or not right now. We're driving at this double top, and this could very easily be taken out in the near future. But if 9,200 holds sort of as topside resistance, then we'll have a chance to buy a pullback in the UK 100 or the FTSE 100. Now, the reason why we picked the FTSE this week is because there's a lot going on in the United States. You've got CPI, you've got PPI, you've also got retail sales, and you do have the negotiations between the Russia, Ukraine, and United States representatives, and actually Trump, Putin, and potentially Zelensky himself. It's a big deal. We want insulation from that. Diversification is a good thing. If you want to get away from trading the U.S. dollar directly, then you can definitely look at the FTSE 100. Not a bad place to go looking for a trade. All right, the last market that we're going to look at is gold. Now, these are relatively straightforward readings that I'm going to give you. We're not going to try to reinvent the wheel here. You can see those lines up there were sort of the trade that we had on not too long ago. Not too long ago, I believe about, 4 days ago. This one's been sort of a swing trade, and it's been a very simple one. This is our coded 920 EMA crossover. You can see right there, there's our gold bar. That's our signal really to buy the market. And you can see right there what happened. We bought right in somewhere right around 33.81, got a really nice move up to about 34.09, and since then we had the big reversal on Monday, which sort of suggests that, yeah, there is a lot of sort of bearish sentiment creeping into the gold market. We're going to talk about that in just a second. But the trade itself was relatively straightforward. Stop loss down beneath this swing low. Really not reinventing the wheel here. And then your profit target to the top side is probably just beneath 35. And that essentially is your one-to-one risk versus reward on that 920 crossover. It's still alive, but boy, Monday's sell-off really wiped out all the gains after a strong 3 days after this entry. And right now, we're sort of waiting on CPI. That's going to be a big market driver for gold. Now, what could happen with gold this week with our market drivers? CPI, anything that suggests a hawkish US dollar, all right, is going to be a drag on gold or a negative market driver, a bearish market driver. So if you see a real hot CPI number come out Tuesday, then you're going to be in a position to see the gold market fade a little bit in the near term. And the reason why is that's going to suggest that maybe those rate cuts aren't coming. Maybe we're going to be higher for longer. And because gold is typically priced in US dollars, a stronger dollar, it means a weaker bar gold. It's that simple. Now, if you come in on the other side of that for CPI, with sort of a lower CPI, a real nice, calm CPI number that reinforces those expectations for September's rate cut, then we could see gold rally. Now, from a technical perspective, if we do see gold go up and test the 3,500 level and break that zone, I don't know that holding shorts up there is a great idea. I think you're probably going to want to either abandon any shorts that you're holding or get ready maybe to buy pullbacks to the long. We'll have that coverage for you all week long on our live streams. The last thing, our last market driver, Friday, big day. It's that Russia-Ukraine-U.S. summit. And if there is a peace deal that comes into play, or if it gets leaked, or if we think Thursday there's going to be a peace, then you will see more than likely gold fall. And the reason why is geopolitical uncertainty or geopolitical angst. That's sort of the word of the week, is angst, or geopolitical tension and war, strife, typically leads to bullish gold prices. That's what we've seen throughout 2025, really going back through 2024 as well. So if we do see an end to the Russia-Ukraine war, we believe that that's probably going to be a bearish market driver, and then we're still looking to buy pullbacks maybe down at 30, 31, 32, and then 62% somewhere down around 29.04. Those are pretty solid long-term entries, but we're going to have to see something happen really to the bearish side of the equation to bring those into play. All right, guys, those are your three picks of the week. Everybody, there's a lot going on this week. This is a good week to be a trader. It's a great week to be a trader. So show up, get the job done, join us on the live streams. Best of luck to you. Trade well, and let's do it.